Okay. Um, First of all, is audio still good? And secondly, is the video still good? Has the recording device interfered with the broadcasting device? Anyone? Okay, great. So I'm just going to start in the morning. I'm not going to bother with this, other than to say the natural target at this point is Globex High and beyond. I have no idea. I've searched what the news is. I have no idea. Um, I have no idea, frankly, what the news is. Doesn't really matter, other than to say clearly that you know that the PA is pushing up and shorts are trapped. I don't know why we drove down so hard, other than the China deal, and I don't know why we're driving up so hard. Um, Other than this is the kind of environment I used to dread being in this environment. So let's just go from the beginning count and go all the way through the course of the day. Yesterday we talked, and this morning we talked about needing, going back to the three C's: clarity, commitment, and composure. So what's the first thing that we need in order to be able to take a trade? Is we need to be clear. Do our trades, what environment do our trades work in, both from a setup standpoint and a price action standpoint? I'm really having a difficult time communicating to my one-on-one coaching clients the importance of recognizing the PA that's associated with when you make money. Okay, I don't have a better way or a clearer way of stating that. Right? Here's the challenge, and so I'm going to do this. We open up, open drive lower. This morning, about the middle of the morning, this is not a critique of anybody, right? But I had someone ask me, "Hey Simon, when are you going to, are you going to take the long here?" Or this was a 10-point down rotation. And if we look, as you know, I emphasize the 10-point rotations. Let me get my tool. So from 2063 down to 2053. So there's a couple of things. Let's just go through step by step. First of all, at 2053, there is no structure. There's nothing here. Secondly, clearly open drive higher and the first open drive lower, excuse me, on both NQ and ES. And then um, if we go look at NQ, hold on a second, I got to exit some of my options here. Give me just one second, guys. Um, okay, great. One second here. We'll leave that for the home run. Okay, so first of all, and if we look at NQ at the same time, again, for those of you that are trading, I am not. So NQ is already above Globex high. I would not be surprised, obviously, to see ES do the same. Okay, so this is where we're at above Monday's low. Um, let's get this time reference. Here's 9 a.m. There's 9 a.m. Here's 9 a.m. Okay, so we're actually holding above. We haven't even touched Monday's low at 9 a.m. NQ's already tagging into Monday's low by the time that by the time we get here, right? So also look at the size of the rotations within this, right? If we switch this, well, heck, I won't even bother doing that. Let's just erase this. If we look through here, how much rotation has occurred prior to 9 a.m. in these bars in a 5-minute basis? There's almost none. Now I'm sure if you go to a 1-minute bar, it looks a little bit different, but there's almost no difference in the excuse me, in the rotation sizes. They were just not there. So what do I need? The question that should be in your mind is, what do I need to be able to get 2 points out of the trade? So I go right back to the formula. Average rotation in S&P 500 is 4.25 to 4.75. I have a 2-point exit. Why? because with a 2-point exit, I require less than 50% of the average rotation, and I have very high odds of getting 50% of that rotation and getting the majority of my risk off because my thought process is of someone who's trading leveraged. If I'm not trading leveraged, I don't care as much, right? I have much more leeway to operate, okay? Number two point is that if I'm not getting the 2-point rotation, even if I have the 10 points, this is exactly what I mean by we're not in that environment. I'm going to give you a counter to that here really quickly. If we get this environment, this is, let's see, Monday, Friday, that doesn't count. That was a holiday. There we go. So when I look here, what am I getting in this environment? Well, let's go through it. This is different. Open, push down, rotation up, push down, rotation down, push up, rotation back down. These rotations are roughly, oh, sorry, that's YM. Let me flip over to NQ. Excuse me, ES. Friday, Thursday. There we go. From low, 2067 to 2073, 6 points of rotation. What do I know immediately about this environment when I look at it? Well, the first thing that I know about that environment is it's a balanced environment, right? The rotation, we discussed that this morning. If we had more than 10 points, really more than 8 points in the first 30 minutes, we knew to expect directional moves. Under 8 points, we knew to look for balance. What did we get here in this environment? We knew that we had balance by 9 a.m. New high, push back to the middle, and that, in this case all the way to the end of the range. New low, back up into the middle, new low, back up into the middle, new low, push back up. So this is what I did identify as balance with a downside bias, right? If we look at this morning's, by contrast, we can see there's wow, that's just an incredible chart. We can see there's very little tails. There's no tails on the top side. There's almost no counter rotation. I know immediately that there's little to no rotation. The biggest tail here is from 2063.50 down to 2054, almost 10 points, right? And the biggest counter rotation I can get back up is to 2058. So from 54.50 to 58 is 3.5 points of rotation after almost 10 points down. That sucks, right? And is not balance. It's open drive lower, which I said would announce that was a very strong possibility. And then what was the last piece that I left everyone with in the market preview? Let's go back and grab that chart. And I said, coming into this morning, that in order to get an upside move, the first thing that we wanted to see was a break of this trend line. That just occurred, right? It didn't occur till literally right when we started this at the top of the hour, right? We finally broke to the upside. So we had a bunch of things. We were downtrending coming into the day. We made no attempt to test the top end of the trend line. And then the other thing that I pointed out was coming in from overnight was that this was our low overnight. That is correct. That we needed to hold above that 2066 by the time we opened. Just to give you reference on everything, this is our open here at 8:30. We never even got a backside test of that 2066.75, and I mentioned that I would have that on my chart. So let's add all the pieces up. Open drive lower, lack of rotation up, no backside test of the early Globex lows, right? That held through most of London, right? And no counter rotation. So the first thing I'm thinking as a trader, you got to ask is this the environment where I'm making money? Look at your P&L on your balance sheet, guys. If balanced days are the days where you're getting paid, right? Then you've got to go, well, wait a minute. Balanced days are days I get paid. I want nothing to do with this particular day then. If the balanced day is the day I get paid on, right? I want to be immediately cautious. Now, for those of you that have been in my room for a long time, that's not a big deal. Most traders fantasize about getting this read, seeing this break, shorting, where the hell's my pen? Shorting here, and writing down to Never Never Land when we go to zero. My question to those traders, and to any trader, is, first of all, how many days do we open up and we go straight down literally for 30 points? Last time that happened was January, and it happened for a period of about a week and a half. After that week and a half, if you kept trying that, it's been a long year for you. You've probably lost all your money because it really hasn't happened on any consistent basis since then. So fantasizing that you're going to catching an open drive higher is easier than catching an open drive lower, right? Because you would have had to somehow look at all the elements, all the news that was going on around the world, deciphered why we traded all the way up to 2078 overnight, why we traded all the way down at the open, and why there was no responsive buyers at the open, and what was going to fuel a drive down to 2035. I just don't know many people that can muster that type of trading intellect to come up with that answer. I know I can't. I know that I'm not that smart. But I do have a counter to that, right? I do have a way to answer that problem. And the way that I answer that problem is really very, very simple. All I want to do is sidestep this. No one in the room, all the way down to here, should have lost a single penny to the long side, right? These were the areas, once we came in and I identified that, I avoided the exact impulse, we all did, hopefully, that I'm talking about. Let me switch this pen. Gosh, I wish I was better at this epic pen. So we put it together. We immediately knew that by 9:30, NQ had broken below last week's low. If we look at the same time at 9:30 here, we were just testing last week's low. Now, what do we know about last week's low? It was important. It's been respected, right? We traded below that when we had the Greek, quote, vote that really wasn't a vote. Everyone already knew they didn't have any money, right? You can't vote to pay for what you don't have, right? A second. Okay, so we already knew at this point that NQ was already trading below last week's swing low, right? So then we go, the next question is, do we take each of the zones? You notice I hesitated at Monday's low. Why did I hesitate at Monday's low? Because NQ was already pounding, A was leading us to the downside. It was out accelerating ES to the downside. As mentioned in the market preview, right? NQ has been a leader to the upside. It's generally a leader to the downside. So we waited. Where did we come in? I mentioned 2046 was very key and that we should get responsive buyers the first time into that area. So actually, I believe I said somewhere between Monday's low and 2046. I took along at 2048 and a quarter, if my memory serves me, without going and pulling up my chart, and I was able to exit 2049 and a quarter and 2050 and a quarter out of that trade. This is the, let's go through the count. The focus is first time into the zone. This zone obviously busted, but we waved it off. And look at the size of the rotation too, from essentially 2064 to 2044. We're right on the cusp of a 20-point rotation. We got our first rotation in. This is second time in. It gave a small rotation back up. I saw no reason to play with that. Then the zone gets busted. This orange line did not exist at that point. It was first hour low, right? Which at that point we'd come down, but it was not a zone, is the point that I'm trying to make for those viewing it later. Here's first time into this 2041, 2039. If we took, I believe I took the top of the zone, 2040, or just a tick in front, 2041 and a quarter. And this is very important for you, those of you who've been with me for just the past couple of months. You've noticed that I've been tightening up my stops. you'll notice that as soon as the range expanded, I increased my stops. This is a double-edged sword, right? On the one hand, it's very nice to try to trade with 2-point stops. 2-point stops only work in very tight, narrow rotations. The reason why, for the majority of my career, I've kept 4-point stops is because they let me survive when the market oversteps. I knew that this is good location, right? We have a big stretch here. So I know the market is stretched. If I use a 2-point stop from where I entered this trade, all I did was get stopped out at 2039 and watch it trade to 2047, and I feel stupid. Okay, and then there's every argument in the world. Well, you can enter twice, or you can come back in. Well, where am I going to enter twice? Maybe here, right? But this is the second time into the zone. And then let's follow this through to fruition. Came in, first time in, we survived. We get our 2-point scale. Some people got more than that through here. Okay, and then we come in, 2-point scale, come down, backside test, push up. Hold on one second here. I want to see what we're trading. That's fine. And then we push back down to the downside, right? So this is first time in, second time in, third time into the zone, and I'm sitting there waiting at 2034. Now, 2033 was the low from the Greek default. This is very, very stretched. But what I'm happy about more, or I'm not happy that I didn't get to fill, right? I was sitting there at 2034 and I was waiting, right? But what am I more happy about? When I came in this morning, I said, and I put in big notes, do not get eager to short below 2046.75, okay? Remember, trading is 2 parts. You have to be able, the natural goal when we come in and trade is just like walking into a casino. I'm going to kill it. I'm going to make money, right? That's goal number 1. Goal number 2, right, when we trade, goal number 2, everyone forgets about. I want to survive, and I only play in my highest odds location. If you think like a sniper, right, and well, JD's in here, and JD told me, right, when you get in a bad position, the best thing to do is to get the hell out if you're in the military. If you find yourself in a position where you don't have to fight and you can get an exit, you want to exit if at all possible, okay? Once we are below here, how many days, if you go count back on your calendar, how many days do we have intraday bigger than a 20-point rotation where we stick below that 20-point rotation? The answer to that question is pretty simple. Almost none is the answer to that question. There's almost no days where we get down more than 20 points and we stay down more than 20 points. And additionally, while we were coming down, what did I say when I took the long, both here and I think here as well, right? What did I say when we were in there? What is the point of the stop? Everyone comes in and operates psychologically from a point of view of, I want to avoid getting stopped. I want to do anything I can do to avoid getting stopped. The stop is to keep you alive for tomorrow, it's not something to be avoided. If you'll embrace it as something that's good for your trading account, it will not be a threat. You will find your P&L growing. You will find you stay more relaxed and able to observe the market action and your own thought process. And I said this out loud when I was in the room. When we were right here, I said, I'm about to get stopped. Now let me tell you something that's important about that. If I picked up my finger, I moved it over to my mouse, and I clicked the damn thing because I was pretty sure I was going to get stopped. And the thought that went through my mind is, well, if I click out now, I can save 3 ticks, right? $36 a contract. That's what I was contemplating saving myself. Like that was going to make a difference in my world, okay? But if I just stay cool and go, if I take the stop, I take the stop, I'm back to fight for next day, I enable myself to get this huge run. The next thing I want to point out, and I spoke to many people in the room, I had a bunch of people that front ran that. They saw the responsive buy and they took it long. You've got to stop when you're going through the day. Well, you don't got to do anything. If you want to be a good trader, you should have a notepad right next to you. And again, if I were doing this, okay, what reminds me, actually, are pilot's instruments, right? I'd want a separate chart, and that chart looked like this. and it would have an altimeter in it. That altimeter would just go like this. Here's prior day's close. Here's today's open, right? So that's 64 to 63. And I'd go, it's highly unlikely that we are going to be down more than 20 points. So let's just go from 64.75. That puts me at 44.75. I messed that up. Sorry, my ADD is kicking up now that I'm tired. There we go. 44.75. And I would have it highlighted like that. I don't want to be shorting down here any more than I want to be shorting. Now, that's different on the long side, any more than I want to be getting long when we're already up for the day over 20 points. What's the reason for that? I might catch the one day where it's going to close on the high of the day and it's going to knock it out of the park. I might, okay? But it's unlikely, okay? The reality is of that situation is that I am likely to get caught short down here, even with a 10-point counter rotation. But if you do something simple like this and just mark off this territory and go, hey, I know I don't want to be short, there will inevitably be a day where we get a down day that looks like this. And we close flat at the bottom of the day, and it'll be a minus 40-point day. I challenge you, you being anyone who's listening to this, go pull up your charts. You're going to have to go back to January this year. There was 1 or 2 days. And after that, the first time I can think of, maybe October of last year, and then August of 2011. And maybe you can find 5 days out of those 3 periods where we were down more than 20 points and closed there in a day. Okay? You're asking to get smoked in this area, but also you can assimilate, I think that's a word, redirect, refocus your efforts. You can refocus your efforts on, hey, if I'm long in this area and I have 5 contracts, I'm going to at least leave 1 for the Hail Mary that we can at least get back into range, right? And if you're really, really lucky, you'll push all the way to the other end of the range. But if you don't have the ability to go anywhere in your written notes or anywhere on a roadmap for yourself, hey, this is critical area. And I got to tell you, I made the same mistake too. I got tired. It was already 11 a.m. I only can make so many good decisions. I worked my ass off all the way in this down sweep not to get bone crushed. Okay? For me, that's an accomplishment. I trade so leveraged that I do damage to my account if I get run over on the way down. So I worked my ass off not to get run over. The problem was I never went, hey, wait a minute. We're so deep in the hole that I need to find any excuse I can to get long in this area and at least give it a shot to the long side, right? So I survived this. I came out with, let's call it somewhere between 3 and 4 points on this down sweep. As long as I'm not negative, that's a big plus. Then I made a mistake. Came back from lunch, we're getting this V shape, and we rejected from this area right here. And I figured we could make a U-turn and come back and re-auction back into this area before getting a swing back up. And I got a swing short indication. I was wrong, okay? And I got run over with a 4-point stop right here. 2 things about this in the afternoon. My trades in the afternoon have been more difficult, and I've been using options have helped significantly, but my stops have been getting run over. This is the second day in the afternoon. A 4-point stop has gotten hit, and I pretty much made the same mistake. If I calculated 2 points behind this stop, 2066, and then I put 4 points in front of that, that would have put me at 2060. 2066, 2062, okay? And it would have given me a prime fill. This is the exact opposite of the mistake I made yesterday afternoon. Did it twice. I will learn. I have it recorded in my head. I cost myself a stop, but more importantly, what did I do in here that was the most important thing I did of the day? I stopped fighting the market to the downside. This is what happens to a lot of bad traders. And I'm going to show you. Bad traders get smoked coming all the way down, and they go, fine. I've lost a lot of money coming down. I'm not going to stop because they don't have a written trade plan. They don't respect the downside move, right? They go, I got chopped up all the way down here. So what I'm going to do is I'm going to start finding ways to short all the way up. And what they're doing is doubling and tripling their bad day. So let's summarize. The market's hard. This is being driven by news. We did a good job. And by we, I mean I didn't hear anyone in the room who did not do a good job in that open drive lower this morning. Not a person. Mission accomplished for the day. You didn't dig a hole, right? A lot of you can improve in this area. I spoke to no one who carried along all the way out of here back into this area, even though we were down significantly. Right? Don't beat yourself up. Write it in your notes. Print this chart up, right? And then this is an important thing. Go prove it to yourself that that is an incorrect thesis, right? Go pull up all the charts you can find where we were down more than 20 points and we closed down more than 20 points. It's not going to be a big collection of charts, I can tell you right now. So then, last piece in this formula, now that you're in it, right, is you can go in and you can remember for next time and you can come up with your own chart. And all you got to do on that chart is measure what the average close and it adjusts per market, right? But in general, even in the wildest of markets over the last couple of years, it's hard to get us below 20 points and hold below 20 points. It's a water ball. It's an air ball being submerged underneath water, and we're popping to the upside. I don't know why we're rallying right now. It doesn't really matter. But that's how you survive a day like today. And then as soon as I took this stop, I know the majority of my profitable trades, this is important for my trading, okay? It may not be important for yours. Majority of my profitable trades come in this time frame right here. The majority of my bad trades, okay, come in this time frame because the price action is not as predictable. There's fewer participants, it's summertime, it's thinner, anything can happen, and generally, well, does, right? So that's my synopsis of the day. I had no way of knowing that we were going to test all the way down, almost to the low from the Greeks, right? And I did not play this day as well as I'd wanted to. I'd have liked to hit a home run. But I also know that when I go look at my portfolio of days of where I do well, this is not where I do best. In a little bit more controlled environment where the rotations get snaps off of 10 points and we contain plus or minus 20 for the day. And it's not wild in its nature. And what I mean by that is this is straight down and then when we reverse it's pretty much straight up, right? And I do better when we have days like last Thursday, even last Tuesday, and we'll go back to that, right? We'll get a mix, hopefully, some balance between just ripping straight down and straight up to getting counters. The market goes through cycles. The market's adjusting for obviously not having properly taken in the risk for Greece and China. It's adjusting for that, and hopefully the hope is that the range stays a little bit wider because I really believe it's been suppressed by the Fed's action over the last couple of years. So let me see if I can answer any questions here real quick. Hold on a second. How do I erase this? Okay, I'm going to go through the questions. Hold on a second here. Brian, could Europe or the DAX have been weighing down the ES given that is when we turned when Europe closed? Well, yeah, that's pretty normal, Brian. I mean, that used to be like clockwork, that you get the London close. That's been a trade for a long time. It's only been failing as of the last 3 weeks. But generally speaking, 10:30 to 11 is a bullish period of time. So yes, is the answer to that question. Does anyone else have any questions? I don't do this very often live, guys, so if you have questions, now's the time to ask. And I have the chat open. I'm actually looking at it. Like I said, that 2079 is prime target here. This is hard. If you can, Yeah, it's worth trading. I mean, if you look in the morning, Brian, we got two trades in a row where we got great location, and we almost had the third. We missed the low by 1 point. The zone missed the low by 1 point. I would say it was worth trading in the morning. In the afternoon, yeah, I mean the swings were okay. It's been harder in the afternoon, and that's why I'm trying to figure out a way to integrate options, particularly some of the binary options, into my into the trading room. But I have not done so yet. But this was very tradable this morning. There's no question about it. We were getting decent enough rotations off of big stretches, and I lost my focus. That was my fault. But if I'd kept my focus down there near the actually, I'll take that back. I didn't lose my focus. I was completely prepared to take the long at 2034. It just didn't get hit, and that's that. And it didn't get hit in order to give me a retrace. So I'd say it was worth trading the afternoon. Um, Even if you look at the afternoon, backside test the first hour rejected, Monday's low rejected. Um, if I'd kept a 4 point stop behind the back of this, and I made the same error 2 days in a row. But if I adjusted this, I would have actually ended up with a profitable trade here. So I wasn't too far off, which again is good. That was weird that we got that one last leg up and then it exhausted. And then I read this pretty well. But even look at the zone, 2068, rejected off of that. And then if you look, we're coming up to 2075 and 3/4. We're rejecting right in front of that. Then Globex high. I think we probably end up, well, hell, I don't know where we end up. This is pretty wild, but this is also second day in a row. From a 24-hour perspective, we went from 2078 down to 2034. That's 40 plus points of up and down, 40 points of rotation in a 24-hour period. Anyone else have any questions, guys? Ron? No, there's no way in heck I would have held it for 40, Ron. Agreed. But I would have held it for 10. From that 2035, I would have taken 10. And not only would have I held it, it was a pretty easy 10. I mean, it pretty much came within 10 minutes, right? It wasn't exactly a big stretch. Oh, wait, there's some other questions. Let me see if I can get to them here. Oh, excuse me. Can I help you? I don't know them. I really can't sign for it. I apologize. Okay. Let's see here. Let's see. Yes, hold on a second. Guys, that's really all I have. No one else seems to have any questions. But it was a fun day. I'm glad to survive. This is not where I make my money, guys. This is home run territory. If I get it, that's great. I'm glad I'm profitable. Did well on the option side of things, really well on the option side. But the options are different because they don't require the stops that I require in futures trading. I still think we get up to NQ's leading this up, 2078. I think it's definitely doable. And we're holding above Globex. Globex low. We still need to get above Globex high. So we got a little ways to go. Sorry, I misread that chart. But NQ's at the high of the day. ES at the high of the day. You'd think we start to run out of gas, but I don't try to figure these markets out like this. Anyone? Okay, guys. Well, then I'm going to wrap it up. I hope everyone had a good day. I got good. Oh, wait. What about shorting Globex high on NQ? This afternoon? Mari? Not with the last half hour to go. Who knows how many who's trapped and who's not? Too hard, in my eyes. And this is one of those days where after right at the close, we could either tank 10 points or run 10 points. Either way, I think we missed, and I think there's a grace that comes to going, hey, I missed the up move, right? I'm going to wait for it to refire and hopefully get a little bit of clarity by tomorrow morning. But we had good trades this morning, right? So my profitability has definitely been better in the AM than it has in the PM. It's been harder with the randomness of the swings, and I made the same mistake 2 days in a row. I will not do that a third time. I will definitely focus on making the adjustment there for tomorrow. But I've been having good calls. And if I could have gotten that one last piece at 2035, it would have been really a home run day. The stop this afternoon kind of sucked, but you know, if trading were easy, everyone would do it. So that's okay. Anyone else? Okay, guys, then I'm going to kill it. I hope that helped. I don't see the point in trying to short an end of day move up. And then I have one last thought about the market here, right? If China's market sucks and is illiquid, and if EU sucks because it's the EU with Greece and the problem they're having with their currency, even if the U.S. market sucks, it still leaves us being the best of the worst, right? And that leaves us nothing but potential upside rotations to deal with. Also, very important, this 2070 to 75 is a big, big area, right? Coming off of 2070 to 75, holding that opens us back up to come up and testing. There's an open gap here at 2096. And then you have this 2110, 2107 to 2111 area has been the general balance area, and then with extensions up to 2120. But closing above 2075 or gapping up above 2075 and holding tomorrow certainly gives us room to the upside. So I'm not bearish or bullish. I'm not upset that the market's doing what it's doing. It's just a market, but it's a big move. It's an impressive move, but it's a big move and it's an impressive move, but it's certainly capable of continuing to extend. And if I was going to do homework, I'm not going to go through this. I'll cover it tomorrow morning. But I would go back and I would answer one very simple question. What does the next day look like historically when the market does this? What are the patterns that follow it? I'd want to know very much so what those patterns look like the following morning and the day in general. So anyways, we're approaching that 2078 now. And really wish I had that long, but c'est la vie, I don't. No harm, no foul. Brian, you're funny. USA, USA, USA. Yes, very funny. Anyways, everyone have a great afternoon. I hope this is helpful, guys. I'll try to do these once a week.